We got to start off talking about trade. It kind of seems like we're back where we've been many weeks before. There's looming deadlines, a lot of talk about retaliatory tariffs and things like that. The fact that the EU is at least planning countermeasures if the deal talks break down, and also the administration is talking about the USMCA, which is like a year out. Does that change the math on tariffs overall, specifically the rates that you expect when it comes to Mexico and Canada, and maybe even for the EU, our biggest trading partner?
No, we haven't. Look, we're looking for positive developments here, at least stuff that's just better than Liberation Day, which just freaked out markets. The one thing we have now is some offsets, at least with some investment incentives with the One Big Beautiful Bill Act out there. So, look, tariffs, negative. If the headlines end up being worse, yes, negative for markets, especially as we've seen this melt up in the past few weeks.
All right, your word of the day is counteract. So is that what you're saying? The One Big Beautiful Bill, it counteracts the impact of these tariffs?
Yeah, exactly. So, yeah, word of the day, counteract. Yes, tariffs were the negative. We got that out of the chute this year. We followed that up with some good incentives and tax policy on the other end to kind of offset that. And then if you kind of broaden this out to markets, yeah, valuations and implicit growth expectations are really high, but we have sentiment in a market that's willing to pay for it. So a lot of forces right now counteracting each other, and that's why we're seeing good action in equity markets. All
right, I just want to go to your pick and tell me if this is kind of a play off the One Big Beautiful Bill. It's the IEX. It's a small and mid-cap industrial ETF. Why is this a great buy right now?
So kind of a few things here. So we've been warming up to SMID a bit here, and we want to stay in cyclical areas where really SMID is not priced well. We're at really big discounts. So IDEX is a small and mid-cap industrial company, pump, valve, and metering name that plays to a lot of secular themes like water, oil and gas, agriculture, and so on, all supported by One Big Beautiful Bill. Then on top of it, you got a company that's about to see an earnings growth inflection, and it screens our least crowded multi-industrial name under our coverage. So here you don't have all the counteracting forces, and finally some tailwinds. Earnings season is going to be key, though, for the stock.
All right, I want to talk about the broader market just for a bit. Like we've noted here on the show, things like the ARK Innovation ETF have been outperforming in recent weeks and months. If you just look from the start of July, ARK Innovation ETF's up about 10.5%. The market's up about 1.5%. Just kind of giving you a sense of how investors are playing some of these higher beta names. How are you looking at some of these higher beta names in the market? And then I want to, if you don't mind, bounce something off you from JP Morgan this morning.
Yeah, sure. So honestly, we still have conviction in secular growth themes. You know, we're not all in on small cap beta yet. We want to be selective there, like IDEX, the stock of the day. But also, large cap growth is where you've seen earnings growth follow through. Markets want growth. They want to go to places where they can see visible growth. Innovation, one area, small cap inflections could be the next.
All right. Are you worried at all about investors kind of chasing the rally, chasing some of these, I guess, riskier bets, but higher beta names, higher valuation names? I'm going to read to you what JP Morgan said in part. Dubravko Lakos and his team saying in part, high beta crowding could persist. We believe the current 100 percentile crowding based on our quantitative analysis not only presents a risk for this crowded segment, but is also a red flag for the broader market, implying there's rising complacency in the short term. They also go on to say, this crowding is particularly unsustainable as it soared from the 25% percentile to 100% percentile, yeah, in the last 3 months. It's hard to get that one out. Agree, disagree with this take that all this money is crowding into this area and it might just be a broader sign that a froth, a bubble, whatever you want to call it?
Disagree that. I do think there's some broadening, even in high beta. You've seen small cap finally participate here. Where the risk is to us is, yes, sentiment's high. Yes, you're going to see some names that beat and raise that actually pull back. But the fundamental stories, if they're still intact, you can actually use any tactical pullbacks as buying opportunities. Look, I think if you got a stock that puts out good earnings, has decent commentary, and comes back, it's a perfect time to go back and add to it. And I think that holds true for the broader market as well.
Drew, almost out of time, but we had a guest earlier today say that gold's a great place to be. They said a gold ETF, the GLD. But agree with that idea, like there's quite a bit of uncertainty and the idea that gold may be a safety play right here?
Yes, I also think investors, not just money flowing to gold, but you're seeing short duration ETFs on the fixed income side. There's a lot of places where you can get 4, 5, 6% yield without taking a lot of risk. We see investors diversifying across asset classes right now. Good way to play kind of an uncertain setup.